And good afternoon. Welcome into a Monday, December 7th edition of Market Talk. I'm your host, Jesse Allen. Great to have you here. MarketTalkAg.com. That is our home on the web. You can find us there. Find us on social media as well, Facebook, Twitter, Instagram. It is all at Market Talk Ag. Find us on all your favorite podcast sources as well, including Spotify, Apple Podcasts, SoundCloud, Stitcher as well now, and also Google Podcasts. We just added Google Podcasts as well. Well, let's talk about our Monday in the grain trade and the livestock trade and more. As kind of a mixed day, we saw corn and wheat a little bit higher, beans in the soy complex, as well as livestock to the low side today. Our guest, he is our good friend, senior market advisor with Total Farm Marketing by Stewart-Peterson. Bryan Doherty is joining us here on the program today. Bryan, let's bring in. How are you, my friend?
Hey, I'm doing great, Jesse. Thank you for the invite again, and another week, and here we are. So,
Yeah.
you bet.
It just I like kicking off Mondays with you and taking a look at the market trade here after we have a weekend and we get into the trade and kind of see where things are shaping up during the weekend. Today, like I mentioned at the open, kind of a mixed day. Corn and wheat were really the only things that saw gains today. Why don't we start there and maybe just take a look at this corn market first off? What led us to a little bit of a nice uptick here today? I know we started Sunday's session
Yeah.
overnight lower.
Yeah, it looked a little scary this morning, actually, because if you're a chart watcher, prices broke through on most of the futures contracts, what we call an upward channel line. And then, Jesse, what it did is it tested the 21-day moving average. And if it breaks that, it looks like there's some room for it to drop below. But it seemed like the drying interest or the selling interest dried up and the buyers, took a shot at it. So what we ended up with on the day is actually a pretty impressive hook reversal. So that means we took out Friday's low and then we reversed up and finished higher. Probably the only thing a little more friendlier than that would be a larger range where we take out Monday or a Friday's high. But
Mhm.
so we had that. So we had really, again, solid export inspections. I wouldn't say they were great, but solid. The um, the word on the street was farmer selling really started to slow up,
Sure.
and basis levels continue to firm. We continue to see that. So it looks like we've got just a really good groundswell of demand. And I'll argue, I think it continues to go back to two things. One, last year's crop wasn't as big. And two, farmers concentrated on selling soybeans out of the field this year because it told them to, and they stuffed corn in the storage and they just aren't ready to take it back out. But along with that, number two is this idea that, hey, we've just taken 1 billion bushels off of carryout from the USDA. What's next? Things are headed in the right direction.
Mhm.
And you've got a little bit of a dry weather concern that has at least pushed the South American bean crop back. Consequently, maybe less South American exportable corn.
Yeah, and looking at things here, we saw weekly export inspections and corn were a little soft, but you mentioned basis getting stronger and all that you mentioned too with soybeans getting sold out of the field, and I'm really liking this corn market right now, Bryan. Just from what I've seen with this nice hook reversal today, and finishing up a couple of cents, it seems like we're trying to test that 425 range again and trying to push past it.
It does. What's interesting is the last 5 years, we've seen the corn market really struggle to advance much more than it has in October, November, and then just kind of goes flatline. But if you go back the last 15 years, we've got on average a really nice recovery into the midwinter months. And it looks to me like we're on that track this year based on world demand, smaller crop, tighter carryout, those type of things. All arrows are pointing to higher at this point. I don't want to get over my skis a little too far,
Mhm.
but we've kind of crossed the threshold this year between excess inventories and sort of a sluggish tone to, hey, we need to be really watchful in the world market, just how tight these supplies are getting. And I think the end users kind of caught on to that.
On the wheat side, Bryan, it seems like the dollar remaining at the lower end of the range, it really hasn't shifted export
No.
competitiveness yet. But, we saw wheat a little bit higher today. We saw export inspections. They were decent, a little over 500,000 metric tons. What are you seeing on this wheat market right now that maybe some of our wheat growers out in the plain states might want to pay attention to?
I'm seeing a downtrend is what I'm seeing, unfortunately. And so that's reflective of a couple of things. One, ample world inventories. We've said that all year, but with COVID and then dry weather, in particular the Black Sea region and the western plains of the U.S., the question is, one, are countries going to kind of hold back on exporting? Russia said they would. Last week, they seemed to open that window up a little bit more, maybe from 15 million metric tons to maybe 17 million metric tons they'll sell. But a little better crop conditions. Remember, last week crop ratings improved 3% for the hard red winter wheat belt, somewhat unexpectedly. But I think the market's kind of showing its true colors. And what does that mean? It's coming to the realization that beans are tight, corn's tight, wheat is not tight.
Mm-hmm.
The trade seems to be buying corn and beans, maybe selling wheat. So there's some of that trade. But the other variable there is that the wheat has a poor technical looking picture. And when I say showing its true colors, boy, when you get the dollar sliding like it has as of late, you should see the wheat market almost do the inverse, and it's not happening. So that just tells us it's not really either competitive or countries are still last resort U.S. They'll shop elsewhere right now.
Brian, let's switch over to soybeans. We saw the bean trade. It was a little higher at midday with improved weather in South America short term, and then we just kind of saw a little bit of a little bit of a reversal. Some of those front months finished lower today. Some of the far deferreds they were okay. Really wasn't a terrible day in the bean market, but I know we're kind of stuck in this 1160 range. And you mentioned beans are tight. Export inspections remain strong, but one has to wonder, are we going to go test those that resistance level at the $12 mark anytime soon? Where are we headed with beans right now?
Great question. And we're in one of these environments right now where you just hit the nail on the head. You've got really good export inspections today. I think we're 84 million, somewhere right around there. 84.4 million. The rainfall totals were scattered in light into the weekend, but expected to ramp up a little bit here today in the next 3 or 4 days. And so the market's got that to contend with. When you look at the overall trend, though, in soybeans, it's this massive upturn that's been in place for several months, and now a minor correction. It's a minor correction downward. It seems to be holding support. I think the bear spreaders came in today and said, we're not seeing maybe enough new export sales. Inspections are good, but it looks like they sold the front months and bought the deferred months, in particular new crop. You had new crop up and old crop down, so the bear spreads really came in vogue today. Bigger picture perspective. Everything's focusing on the southern hemisphere right now. It
Sure.
just is. 190 million bushels of carryout. There is a report out this week, USDA report. The average pre-report estimate of that, Jesse, has well, what I found interesting was on the range of estimates. Did away with it somewhere, but the range is 190 to 120 million. The average, I believe, was 168, 167. And what's interesting, the highest estimate is the number from last month. So everybody's looking for a little bit of a drawdown there somewhere. But even with that, I think attention for the least immediate term this week is rain or lack thereof in South America, and then the USDA report on Thursday.
And I'm, glad you brought up the USDA report later this week. Typically December reports, we don't see a lot of changes. We don't see a lot of moves. We kind of look towards the January report for some of that. But I just have a gut feeling, and I think a few people have a gut feeling that we might see a couple changes in this report that we wouldn't expect necessarily in a December report. Now, again, Brian, we know it's USDA. We don't know what they're going to do.
Right.
Yeah.
And the definition of a surprise is what we least expect. So being a cynic, what does anybody, where's the surprise in soybeans? Well, it'll have to come in with a carryout number under 120 or something well above 190. And who knows, maybe the USDA will rely on some sort of econometric model that says, hey, prices moved higher in the last 30 days, so quantity demand is less. And so those kind of things can kind of fool people. I think the key with this report or the weather this week is not trying to, feel like you have to have this knowledge to guess it, but really as a farmer, producer, inventory manager, really thinking about strategizing into, these time periods. What happens if things, do tip over and beans drop a dollar? What if they rally a dollar? How do you prep for that? Because if it drops, you're trying to catch a falling knife. If it bounces, you're trying to catch a bouncing ball. How do you do that without, nobody has that kind of certain
Mhm.
power. So I'd put the emphasis on the strategy as a farmer. And I'll kind of use this phrase, um, sell the fact, buy the potential. So if you're a farmer out there and you're on the fence, sell corn, sell beans, sell the fact, sell good basis, sell high prices, keep your pay raise, turn right around and reinvest a portion of that in the potential for higher prices, and do that with some kind of a fixed risk position that kind of carries you out and gives you some time. Now you've just eliminated a lot of risk and put yourself in an ideal position. Is it better than just owning if the market goes up? Maybe not. Maybe so. Often when prices rally, basis widens. So
Mhm.
think about those things.
Great insights there, Brian. Let's switch over to livestock, talk about that. A pretty sluggish day, just kind of some doggish undertones led this livestock complex, cattle and hogs, to the low side here today. Why don't we start with that hog sector? It seemed like the hog market just kind of followed the cattle contracts lead. We're still range bound, but we finished down a buck or so, and quite a few of those contracts today. What are you seeing in this hog market as we start the week? Is there anything to worry here, or are we just kind of caught in this range?
Well, in the hog market, so if I'm a hog producer, and I want to look at something, I might look at the cash index. It's at 66.26, and today
Mhm.
December hog 64.50. So December hogs stopped trading here shortly. Today's the 7th. I want to say it's the 14th. I
I
better
think
double
so.
check that. But the the point of this is that those two are going to get pretty closely aligned. You don't have a lot of premium in the winter months. You get more in the back months. But when you look at the charts, yeah, sluggish. It summarizes cattle and hogs, and the market doesn't seem to know which way to go. Do we worry about these COVID spikes, and is that less demand or is that more demand? Production numbers were pretty big last week, so we're really producing a lot of pork. We've got a lot of cattle that are um, I'm going to say weight gain has been good. As we talk to producers, we think the weight gain's been good. There has been a lot of sloppy, nasty feedlot, that kind of stuff this winter
Mhm.
so far. Um, the dollar weaker should help, but if you take a look at all three, hogs and live cattle in particular, boy, you can go back a couple months. We're trading at the same price as we were. They just
Mhm.
just aren't moving. The feeder market, I think, is that's had a little more strength. It's set back here this last week, but still well off of its lows. Um, the belief is there's just a finite number of feeders, and I think the feedlots are going to buy them as long as we see the live market hold 110 or higher in those deferred months. I think they're buyers.
Yeah, and I think that's a great point. We've seen quite a few sales at this 110 mark. One has to wonder, feedlots might have their work cut out for them this week, just if we continue to see doggish undertones here. But it seems like, show lists larger in Texas, larger in Kansas here this week. It looks like a little bit lower Nebraska, Colorado, but most of the big states, larger show lists out there on the cattle side. And I tend to agree with you. I think if we stay around that 110 mark, I think we're going to see some buyers again out there in feedlot country. Just a matter of, can we push this a couple of dollars higher or not? And I think I'm with you. I think we're just kind of stuck in this range bound holding pattern right now.
It seems like the market's tepid in front of the holiday season. You kind of hope for that big demand and a lot of Christmas gatherings and parties and all that. And the question is, are people just going to eat at home well, or are we just going to consume less this winter? I would guess probably less.
Yeah.
I don't know. Office parties and things, people have a tendency to kind of eat pretty well, and I don't think they're doing that this year. So
No.
that is kind of the kicker there. But should be well supported. We can go back to a lot of things, but we can go back to a storm last year. We can go back to in June of 2019, the spike higher in corn prices, and maybe some reduction in cows then. So I just don't think there's a flood of animals out there, but it's probably enough right now that with uncertain demand, we might be into some trouble. Just going to take a real quick look here. One of the things I do like to just monitor, and I'm just checking today's here real quick, is that choice select cut. And I've been really impressed through the last several weeks with where it's been. Yeah, it's still at $21. That should mean the market's fairly current.
Mm-hmm.
And that takes away the alleviation for me. As long as we're around that $20 mark, I don't think you're going to see, any large amounts of heavy animals anytime soon.
Bryan, let's get what I'm dubbing the Milk Monday update. You're our dairy guy. We saw milk futures take a jump a little bit here today. What is going on with this dairy complex in general right now?
Well, what's really been going on with dairy for some time is there's been two things. One is let's just call it government.
Mm-hmm.
Subsidy pack, anything, food lunch, so there's some real confidence that there's going to be some sort of stimulus package, and where egg fits into that. I think everybody and your uncle, is going to probably think there's going to be something in there for dairy. Here's the problem, though. The dairy producer probably thinks that as well, and they've upped the herd. They increased last month. We were 2% larger, a little over 2% in production, running into a time window when typically, cheese is your really big thing here in Christmas and Super Bowl. And I don't know, I'm
Yeah.
a football fan. I was watching the Packers yesterday, and I think, few hundred people in the stands.
Mm-hmm. Mm-hmm.
They're not eating down the Palermo's pizza. It's not a plug for Palermo, but I think they sell it there. But my point of it is, I mean, you might be at home eating a pizza, but I worry about just kind of that whole Super Bowl. That's always a big catalyst to a lot of purchases, and I know those come a little bit earlier in the fall, but there just isn't much out there that's getting anybody excited. And we know the cow numbers are there, and I will, argue, being a Wisconsin guy, we have had one heck of a mild fall
Mm-hmm.
and early winter so far. It's not stressing the cow at all.
Yeah, it'll be interesting to see what happens. Like you mentioned, those couple factors the next few months with the dairy market. Bryan, any other final thoughts you have here for this Monday?
No, just want to thank you again for the opportunity. I think I
Mhm.
mentioned it last Monday. The stock market continues to toy with, record high, and boy, we've got maybe a changeover to administration, probably a changeover to who knows, but
Mhm.
uncertainty, and usually the market kind of folds its wings in on that. On the other hand, there's a real optimism that there's a vaccine just around the corner, literally.
Mhm.
And it looks like by the end of the year, Europe, particular, or I shouldn't say Europe, the UK, United Kingdom, Britain, they are intending to have millions vaccinated. Um, and I think we're right around the corner in the U.S. I saw a report this morning early about prioritizing who should get
Yeah.
this, critical care workers, elderly, that type of thing. So there's a lot of wheels in motion to get this thing maybe moving right along. So markets like that. And I'm going to say, however, be careful to buy the rumor, sell the fact.
Mhm.
So it comes along. Now what? You still got to get people, factories, everybody kind of rolling and profitable. And I think those profit issues are a concern.
Definitely. Bryan, if folks want to reach out to you and the team at Total Farm Marketing by Stewart-Peterson to get a little help with their marketing advice, how can they do that?
I'd ask them to just give us a call. That's the easiest way to do it. Happy to spend 5 minutes with you, or more. 800 334 9779. Ask for Bryan Doherty, and I'll be there for you.
Wonderful. And Bryan, appreciate the time as always, and we'll talk to you again next week. Thanks.
My pleasure. Thank you.
Bryan Doherty, Senior Market Advisor with Total Farm Marketing by Stewart-Peterson, joining us here on this Monday. Find us again online, markettalkag.com. Coming up next, some special bonus content. I sat down with Laurel Case from John Deere earlier today. If you're listening to us on the audio stream, that'll be coming up momentarily. If not, if you're watching on YouTube, you can find that video linked in the comment section on here as well. And thank you again so much for tuning in today to Market Talk. I'm your host, Jesse Allen. Have a great afternoon.